Good morning, traders. Better late than never. Lots of problems this morning with YouTube. Seems to stubbornly not want to start the broadcast. But now it's up and running. The markets are open. It is 8:31 a.m. Chicago time on September the 9th, 2015, Wednesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The I won't cover the news, but there's a ton of volatility overnight on the Asian markets. Um, I believe the Nikkei was up as far as 7% or something like that this morning. I don't have my notes in front of me. This actually, the broadcast working actually took me by surprise after setting up or resetting my system, so I don't have my notes in front of me. Let me pull that up here real quick. So it looks like, yes, the Nikkei rallied hard, 7.7% up. Abe comments and some specifics of more economic reforms after his re-election as party leader. China stocks also rally higher, 2.3% on the Shanghai Composite. And that caused us to really push higher on our markets. Looking at what's ahead today, at 9 a.m., just about 27 minutes, 26 minutes from now, U.S. Jobs open, JOLTS job openings, expecting 5.3 million. At the same time, we're expecting the Bank of Canada rate decision. And then it's pretty clear, it looks like it's pretty clear till about 10:30 Central, 11:30 Eastern, ECB Speaker Prate in Luxembourg. And then after that, at 4 p.m. Central, we're looking for the New Zealand official cash rate. That's what's on deck for today. A few auctions here and there, and so on. Other than that, let's take a look at the overall picture. It's too bad the market's already open. Had a lot to cover today. So if we look at what we did yesterday, and you're going to hear a lot of alerts going off here as the market's trading. Yesterday we're looking for a responsive selling back to approximately 1941. 1941 being right here. Okay, what happened to my whiteboard? All right, fabulous. Um, okay. So 1941, approximately right here. Didn't quite get there. It stopped at 44. That's 3 points higher. I kind of gave up on the primary hypo, which was to get responsive selling to 41 and then rotate back up through and push to 79 and a quarter at some point. And the reason being, if you look at this chart here, we have this cutoff at 41, this MCLVN, and we opened above it yesterday, and the expectation is that it would hold, and if so, then 79 and a quarter becomes our target. 79 and a quarter is the MC point of control. It's the most valuable price in this upper region here. We didn't quite get to it last time. We stopped at 73.50. The expectation, given the higher low here, is that we would get to 79 and a quarter. However, it was a pretty dull trade until the afternoon yesterday. It finally hit the 74, chop, 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 and it looked like it was likely to rotate and continue lower, and it did not. Instead, we got this rally back up to 68.75 before the close. The auction looks incomplete on the upside, so the expectation is for it to continue higher overnight. On the overnight session, however, we opened fairly choppy at first, and then boom, it hits the 79, 79.50 right here, right on the dot, beautifully. And then from there, I basically lost track. I went to bed. But let me pull up another whiteboard here. All right. 79.50. So there it is. Okay. Things are just not working today. Not very poor technology karma today. Um, 79.50 chopped around for a little bit, and then with the Asian session continuing, with the Nikkei roaring up, we continued higher into the open. So the overall pattern for this morning, P-shaped profile right here. The expectation, given the pullback, the expectation is for it to chop around this morning like it's doing right now. So you can see right now it's pretty choppy. This profile ends with the overnight session, fairly choppy here, and then the expectation is for it to start to test 1980 and to make an attempt lower. If it's not able to make an attempt lower, since we have tested the 79.50 from below in the overnight session, but haven't done so in the day session, I do expect this to fail as part of Hypo 1. I do expect this to chop, 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 and then eventually make its way down to 79.50. If 79.50 doesn't hold or cause us to chop in here, then we basically go down the flagpole and test yesterday's high. Yesterday's high is at 68.75. We're currently trading around 68, around 86. So it's about 20 points away. It's about right for the day range on the downside. Again, Hypo 1, chop, 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 and then rotation down to 79.50, test the MCV POC from above. If we do not get buyers at that point, and I don't know if we will, and anybody who tells you they know is lying to you. If we don't get support at that point, then I expect it to continue lower to 68.75, potentially close the 66 gap from yesterday's RTH session. I did want to cover the fundamentals chart today. If we look at what we've done since 2011, you could see on the SPX index, on the cash index, the S&P cash index, still maintaining a pretty good trend. If you connect the two lowest points on the chart, on the index, on a daily chart, essentially and projected forward, we end up with 1885. The market has dropped to 1867 or so, but now it's holding higher. I drew a triangle a few days ago on this recovery and was looking for. I was actually anticipating a push up, lower, push up, and then I was looking for it to break lower to take out this low, and that would give us the 1827.75 target below that is built on this impulsive move down. However, the current action is tackling the 50% pullback mark. Today, sellers need to step up their game. If they're going to hold the buyers at bay, sellers have to step in and push back down if they're going to defend this low, if they're going to want to see this low again. But it's not looking so great. When I pull up the 52-week highs and lows on the New York Stock Exchange, you can see that it's crossing the 52-week lows are crossing below the 52-week highs, which have been absolutely flat. There's a long way to go for a lot of stocks to start making new 52-week highs. We've been in a pretty roaring bull type market, but you can see the spike here. This spike generally is it has been well above the second standard deviation of where the 52-week lows would normally be. And this creates an opportunity generally for some premium selling, some volatility selling, as we see here, put call ratio shooting up and now back to where it belongs, back in the middle of the cycle. So this it's hard to tell at the moment whether this push up is sustainable. As always, governments are motivated to support their stock market and to devalue their currency. So we're always fighting on the sell side. I'm not a bear. I'm not a perma bear. I couldn't care less which way the market goes. My preference is to sell on trades. if I had to choose a preference, because of the speed with which the market yields profits on the sell side. But I'm not a perma bear. I just call it as I see it. But in general, when you're betting on the short side, you're betting against central banks and treasuries. So it's a tough stay on the short side, and I'm sure all the bears, the perma bears in the group have seen it. Here's a weekly MP chart. There's the cutoff line right here. This is where that 41 comes from. And it clearly separates the volume below from the volume above. On the market profile, here's the volume above, the volume below. And when we combine these two profiles, we get 79.25 as the key area. Above here, I believe it's 91 or so. Above here, it puts us in a thin, you can see the thin zone. It puts us in this thin sell-off zone, and sellers will be in trouble up till about 2050, right up in here. If I can draw a straight line, right up in here. I expect it to work its way up fairly quickly up to that level as the shorts cover their positions. But right now, as I said, the sellers have to defend this and push this back down below 79.25 in order to maintain their control over the market as they have been for the last couple of weeks. The monthly profile, very slim. You can see the month of August has a lot of range, huge range for 1 month, and we're trading in the middle of it. We're trading the middle distribution here, the middle distribution. So again, 79 is big time in play. 51 is that price that I've been talking about. 41 is the price below it. Right now, the sellers are losing ground. They're losing territory to the buyers, and it may continue we may continue to see that, and we also see evidence of that in the VIX. If you look at the VIX chart, let's switch to 15-minute. The VIX chart, you can see how it's collapsing. A strong movement up, very, very high VIX through the China problem, and it's just been moving lower and lower as time goes by, and today it's way down here. So overall, the market is favoring the buy side, and the market's looking to the Asian markets to the Asian economies to recover in order to see a rally back up to new highs. I'm not saying that there will be a rally to new highs, but this is what the market's looking for. And over the last 7 years, this is what it's done. It's fallen off, corrected about 8 or 9%, and then it turns around and it chops its way back to new highs. One thing I want to remind everyone that tomorrow is rollover, and I will be trading the December contract regardless of whether or not the volume has moved into December. I don't care. I trade the front month and roll with the official roll on the exchange. It does skew the charts a little bit from a volume profiling perspective, but it's one day. It doesn't really make a difference to the greater analysis. Good luck today, and I apologize for the problems I had this morning technically here. YouTube has a tendency to continue development and changes things that throws a wrench in everything. Good luck, and I'll catch you tomorrow.